Welcome to the Realty Plus Real Talk series, where we talk to industry experts to know their honest views and opinions. And today we have with us Mr. Sanjay Dutt, Managing Director and CEO of Tata Realty and Infrastructures Limited and Tata Housing Development Company Limited. Mr. Dutt, a very warm welcome to you.
Thank you very much.
Mr. Dutt, it's always a pleasure to talk to you, to listen to your conversations, discussions. You are a veteran of the industry with 3 decades of experience in this sector, and you must have seen a lot of property cycles during these years. In all these years, according to you, what have been the major changes in this sector that have created a paradigm shift or disruption? We know RERA and GST, we are still figuring our way around them. But apart from them, what are the major changes, according to you, that have happened in the industry?
Thank you, Sapna. This is a very interesting question. A few years ago, I was asked to present a kind of a path for developers, what lies ahead. And I had gone through this kind of thought process. First of all, 30 years ago, if you started a business, it was a family business, and you could take it for granted that the family will continue to grow and own. I think that is no longer true. In fact, in my journey, I've seen every cycle, new developers come in. In every cycle, old developers go out. So there is no guarantee of continuity. And what has probably accelerated in the last 10 years is that the second generation is far more savvy, educated, well-informed to do business. However, they are not as street smart as their founders were, because the business is still very demanding in Indian, regulatory environment. You have to spend a lot of time sanitizing the land title, getting the approvals done, etc., etc. But at the same time, the sector is getting transparent. The sector is getting regulated. The sector is getting professional. There are more and more professionals coming in. So it's a give and take. And I think the direction is right. And the most recent aspects of business which have disrupted real estate, in my opinion, is really the inflation, the cost of capital, and the over-dependence on a segment. You must have seen in last 5 years, many developers have ventured out to student housing, senior living, co-living, alternate classes, data sciences, data centers. So all those things are really kind of coming in because the core, the residential, the commercial, it's somewhat crowded. And it's not everybody's cup of tea.
Right.
The other aspect is that earlier you could take, lenders for granted. So IBC code, RERA, many other regulation, and the willful default aspect of the business, all of that has kind of disrupted. So you can't take that for granted, which used to be the case for most of the business community earlier, not just real estate, and which has changed a bit, in my opinion.
Do you also see specialization coming in? Developers are, they want to play in their own niche segment rather than, have 2, 3, assets in their portfolio.
I think traditionally developers were known for a micro market. So DLF was known for South Delhi and then eventually Gurgaon, and then eventually commercial and resi mix. Prestige was mostly Bangalore, Rehejas were in Mumbai, and Hirandanis were in Mumbai. Over a period of time, they did try their hands on expanding in Pan-India, which actually got shut down because that didn't work and they failed. And they retrieved back to their home markets. Now, there are some exceptions, like institutional developers, including Tata Housing, Godrej, and Mahindras, who've ventured out. And now, again, selectively, Prestige, Reheja, GLF are venturing out, but they've realized that they have to stick to their core in one side, and from time to time, given the opportunities of the market and the mandate of their co-investors, explore alternate classes. So if you look at it, DLF has a very strong commercial portfolio, and so does Reheja in Bombay, particularly K Reheja Corp, and likewise RMZ and Saladpuri, etc. But they, also selectively ventured out in other segments like hospitality, for example. Hospitality is not everybody's cup of tea, but they've continued to focus. Shopping center business, a lot of these developers have continued to focus. So in short, look at Phoenix, for example. It's a shopping center company, and occasionally they would do commercial and resi, but the core would be. So the point I'm making is every developer has found its core,
Right.
And core market, and selectively they would do, without taking too much risk, alternate classes and segments of business. There are some new companies which, knowing that the core business activities are very crowded, they've taken a very different path. So they're very young companies into co-living, co-working, student housing, and senior living, and they've done well actually. So I think it's a question of finding the core for your business and sticking to it, and creating an edge for your business.
Right. In the times of financial prudence, business prudence, I think that what Mr. Sanjay Dutt is saying, find your core, find your niche, and probably whether it is geographically or asset-wise, and then stick to it. Mr. Dutt, you have seen all sides of real estate. You have been in domestic, international real estate. You were part of global property consultants, also alternative asset management firm. So you have seen it all. Given the current global economic, geopolitical, social scenario, how do you see Indian economy poised, and especially the real estate, for the next few years?
You see, globally, commercial real estate has been disrupted since COVID. Shopping centers have bounced, hospitality has returned, corporate office segment, at least globally, has been severely impacted. And you heard so many very reputed real estate funds and development companies, handing out keys of their projects to lenders, and then they've defaulted actually. So that's not a very good situation. On the other hand, India has continued to show 56 million square feet gross absorption in 2022. And we've seen even the first quarter of 23, nearly 11.5 million square feet. So it's shown kind of resilience, and it's primarily because India is more into $16 per square feet per annum market than $600 per square feet per annum market. And also, whenever there is a pain, India tends to gain because of outsourcing and cost arbitrage. And I've seen that over 3 cycles. Also, the talent pool, which everybody knows and we've discussed enough, but you can't take that away. If you want to build a scale of a business, and if you want the right talent and at the right cost, and an environment which increases productivity and the work ethics of the workforce in India, all these kind of complement the business, and therefore more and more companies are growing in India, even though they may be are severely hit globally. India still does 50% of the leasing, is done by American corporations. So if America gets disturbed, there is bound to be a pause a bit, but it gathers momentum. So I would say, given this demand fundamentals intact, whether it's office, whether it's residential, whether it's warehousing, logistics, data centers, co-working, co-living, alternate, all are pointing upwards in India for good. And that's what has attracted global investors from medium to long-term perspective. Short-term, there could be setbacks, given the scale of their investment outside of India. You see, India still forms a very small piece, let's say, for the top global fund managers or investment entities. So, but it's increasingly becoming a very important, and more companies are kind of seizing the opportunity in India.
Those are very positive sentiments for Indian real estate. But what do you see the roadblocks in this growth story?
I think excessiveness, India tends to have herd mentality, and that leads to excessive supply in almost every segment. I know right now residential is doing extremely well, and despite interest hikes, despite price increases, it continues to do well. But how far can you push this?
Right.
So you need to be careful. Same goes for office. Thankfully, the new entrants have stayed away because they're not getting money to build. Only the credible developers can borrow and build, and that too at a lower cost compared to others. The land valuations have also made it difficult for everybody to kind of jump into that, scheme of things. So I think it's the excessiveness, over speculation, overpricing, all these factors, and a little bit of arrogance, amongst the developers that, I will do well and everybody else may suffer, but I will come out as a winner. You have to be very prudent. Like you said, you have to be very careful. You have to be very measured. You have to be deep diving every micro market. You have to be very calculative, and you cannot take, again, overexposure, leverage. It can destroy the business, and many have not still recovered.
Yeah.
But still, memory is short, and they tend to come back. And on the, these are internal factors which you can control,
Right.
Sapna. But I think there are factors which are external, and the external factors are the government at the state level is very disruptive. They continuously keep changing the bylaws, the ready reckoners. The cost of doing business at the state level is gone up. I don't even want to get into some of the aspects of business, which I'm assuming the viewers will understand what I'm talking about. Those challenges very much remain. And until the government gets regulated themselves,
Correct.
or the bodies and the departments, including town and country planning, all the other fire and other departments, unless they really come under scrutiny, the businesses will continue to be disrupted at the discretion of those officials who monitor them.
Right. And developers bodies have continually made representations in terms of a lot of their, long-standing demands, from single window approvals to
Well,
approvals.
they have also contributed to it.
Yes.
If they had only followed a very strong, high integrity, high governance, with integrity as a business,
Right.
and not rushed into an indulgence in such activities, they would not have faced the situation that they're facing today.
Right.
So it's a practice evolved over a period of time,
Right.
and it's now causing disruption to business. So eventually, I think there will be a stage when many development entities will go and take justice in the court, and there'll be precedents where the organizations or departments will be taken to task and held accountable. So I think it's a slow process. I think over the next 5-10 years, you will see the market will mature in this space as well.
Right. So how is Tata Realty treading this space as of now? What are the plans for the company, given the scenario? How are you looking at your professional, steering the company?
So really, Tata stands for trust, transparency, and responsible real estate is what we believe that we want to do. And I think our focus has been to grow commercial business, bring it at par with residential, and eventually scale to be amongst the top 5 or 2 development entities in the country. So that's really one direction. But at the same time, we have nearly 15,000 crore of residential inventory to be unlocked through various development that we're doing across NCR, Mumbai, Bangalore, and some other markets like Bhubaneswar and Kochi and Pune, for example. So we are focused on that as much as we are on commercial. So that's the direction. But we are always cautious, measured, We don't want to be in the race because we know markets eventually settle. So we want to be at a pace that we can manage and grow and still make it sizable.
So, we spoke about the company, we have spoken about the industry. In your 30 years of journey, what have been your challenges that you overcome? Maybe two or three or, challenges that, big challenges that you're proud of overcoming.
The biggest challenge in the industry 30 years ago was talent. There was no organized body to train the workforce. We invested heavily. We recruited people from army background, services background, hospitality background, finance background, and we groomed them into real estate. The challenge that we came across is uh, the opportunistic view of the talent sometimes, maybe because the opportunities in this country are so much. Attrition is always high. But I think the way I've overcome is that you create a culture in an organization which encourages growth, which encourages learning and development, which encourages camaraderie, which encourages a sense of accomplishment together collectively. And I've seen many of those who have gone out just to make more money have realized over a period of time that there is no free lunch. So they tend to then realize and come back to work in a healthy environment where you actually prosper, grow, and make money, but not necessarily, be over ambitious. So I think that is one challenge, which is really important, and I think will continue to remain important forever. In this space, I believe in creating proprietary knowledge through talent, which is very difficult. So what do I mean by proprietary knowledge is, let's say office space, you train certain people because you work with tenants and you evolve, and that knowledge is not available outside. So it's very much your proprietary knowledge. So if you retain that talent through this culture and have this proprietary knowledge, your business can have an edge. And that's substantial in today's competitive environment. So that's really one. The second most aspect is the discipline in the business. Earlier, you used to do business basis gut and multiples. I put 100 crores and it is now 200 crores, not realizing that what has been the annual return on investment. So that has been a lesson for many, and I think we've overcome now because of a lot of private equity and global capital which has come in, and they have disciplined the development businesses a lot. The challenges for me on the other side has been regulatory because we've not been able to complete projects in 3 to 4 years time. It still remains a dream. Construction techniques have improved, so I can build 1 million square feet in 15 months. But can I get environment and design approved in places like Mumbai, Bangalore, Delhi, or Gurgaon and Noida in less than 6 months? No, and therefore that builds to the costs. So those are the areas which have not been able to, but practically the ones that we've spoken about are probably the most important ones that I think
Right.
I've overcome. I can say one more aspect is about your credibility. So I believe that initially in your career, you join a brand and you build your credibility on the back of a brand. So I joined CBRE, long time ago. Then I joined Cushman Wakefield and JLL and Capital Land and then Tata's, but they were just brand. But what became equally important is what's your individual brand in the industry? Are you seen as credible? Are you seen as reliable? As you seen as more disciplined, ethical, with integrity? Those aspects, which I believe are extremely important, which I've realized over a period of time, and I've been fortunate that I feel very strongly that has been a contributor to a career. And I think that is what I would like to communicate through you, to every real estate professional that can really add, and you can overcome any disruption. Let's say if the markets are soft, there are no job opportunities. Trust me, at that point of time, only the most competent, the most ethical, the most high governance will get a job. And I think it kind of insulates you.
Right, right. Building your own credibility in the industry, I think one of the most important point. You could be associated with the biggest of the brands, but one should needs to build their own, personality and credibility. That's one of the biggest takeaway, I think, from the conversation. But we have seen it. You are a brand in itself. You have overcome the challenges, remain as part of the professional journey. But if I have to ask you a tough question about picking up 2 or 3 achievements to share with us. I'm sure there are a lot of achievements, but I'm asking you to pick only 2 or 3 that you are really proud of.
Definitely, one of the strongest achievement for me is there is a very high quality talent which I consider they're better than me, and I'm very fortunate, given the last 30 odd years in real estate, that many of them want to work with me, and I consider that as my biggest achievement, because no matter how difficult a job that I can take, I can overcome, because these very intelligent and capable people are there to support me, and therefore that's I consider as the biggest achievement. The second biggest achievement is, these times, and especially most Indians, they impose on themselves uh, a lot of hard work, because we come from a background which was struggle mode, and you don't spend enough time with the family during this journey and building your career. I think I'm very fortunate. I may not be a perfect father and a husband, but I think I did spend a lot of time, and there's some amazing memories that I have of my family over this 35 years of journey, 25 years with my wife and children. So it's commendable. Uh, Lastly, I think I'm generally a content man. I think I'm quite grateful for what financially and stability that one has achieved. And I think I would consider that as an achievement given the modest background that I started with.
That's fantastic. First of all, grooming the talent and, working, building people, working with people who are smarter than you, and those are, still, wanting to work with you. I think that's one big achievement that one can, always boast about. And work-life balance, I think everyone is struggling with that. If one can achieve that, that's one big achievement, definitely. So you've spoken about the challenges, the outlook for the industry, for the company. So before we wrap up this session, what's next for Sanjay Dutt?
Always looking for challenges. I've joined organizations where, there were always challenges. And if you look into my career in last, 10 odd years, you will find more of it than anywhere else. And I think the challenges keep coming. You have to see, and you have to raise the bar, and you have to see where you want to be, given the constraints of a business. So, you can't be in the race with everybody, but you can set your own goals and objectives.
Right.
I would like to be remembered for, building careers for people. I would like to be remembered for making sure that the shareholders of a company see dividends of their investments in the business, and see uh, what Tata as a brand is known for, which is trust, transparency, and professionalism, and scale, which most Tata companies are. So I would like to really see the scale of a business. As you know, we were late in commercial business vis-a-vis many others who are already third generation in real estate business. So I'm hoping I'll be able to scale that, and that's my immediate short-term goal.
Okay, okay. So that's the immediate short-term goal of Mr. Sanjay Dutt, to scale up the business, to build the brand which is already there and take it to the next level. But that was a wonderful conversation. I think we got a lot of insights about the industry, how things are happening, how things might happen in the next few years, and what we are going to see from Sanjay Dutt in next few years. So thank you so much. I know you have a busy schedule, so won't keep you long. But thank you for sharing your time and views with us. And have a great
Thank
day.
you so much, Sapna.
Thank you.
Really enjoyed it.
Thank
Bye-bye.
you.